maybe I should. Okay, testing. That's okay. Just checking the volume. Okay, right. This is the XJO here. So when I'm going through these charts, the code will be up here. But I just wanted to talk about the XJO for 1 minute before we look at the switch situation. XJO, the structure that we're looking at here is pretty much like this. So that is a 5-wave structure like that. And we're looking in the 4th wave here. So a lot of these stocks that we'll be looking at would also be in this situation as well. So the 4th wave here, we put that at 4,600 just to be sort of square it up a little bit. The 4th wave normally pulls back 38.2% of the 3rd wave. So that's the 3rd wave. That's the 38.2% of the 3rd wave at 46.27, which is probably about right because the 4th waves here normally pull back up to the 3rd, 4th wave of one lesser degree. I prefer that rather than the 38.2%. One of the other difficulties in here, and the reason I'm explaining all this for, is that there's a fair bit of risk amongst all this because wave 4s are normally complicated, especially if waves 2 are simple like it is. So wave 4 could be something like that, you know, so rather sort of complicated before we get the next set of 5 waves to the downside like that. And once that, just why we're here as well, once that 5 waves is completed to the downside, like this here, then we get 3 waves to the upside as such. Normally 61 point back up, but anywhere between 40 and 60 is fine really. But anyway, a pattern like that, and then we'll get, because we've got 5 waves here, we naturally get another 5 waves like that. That's what we're looking at here. And a lot of the stocks are like that too in the little 3rd, 4th wave here. So there's not a lot to go in here, you know, unless we're wrong, unless we've got, unless we've sort of missed the whole point and we've actually got some sort of 3-wave correction from here and then we push up like this. I don't think that's the case, but we'll look at that if that sort of pans out a little bit. So we're looking for only a shallow rally. That's the point. That's where the risk is in the stock. So when we're looking at these stocks, if we start with AWC and discuss the switch a little bit. The switch is something that you can buy, is just a little technique to buy on the lows or the highs or in the trend itself. And it's quite simply, I call it the switch because it just switches both sides in terms that this is the low, the market moves up, and then it comes back down, but it needs to come under this low here. It might have 3 bars up there, okay? And it might have 2 bars coming back or 3 bars coming back. But the point is at some point along the way, the movement that's going up could have 3 bars up or 2 bars up. Point is that at some point we get a bar that takes out one of the lows, right? The importance of this is because the market is checking inside the market depth. It's basically cleared all the weak orders out and it's finding its real support. So it's basically a volume thing, and this is just the picture that it's displaying. We can see the support coming in, one would think on the low here, but that's not particularly the case. It's actually this bar here, that volume bar there where it pegs it there. That's where the first lot of buying came in, right? So this is all part of that. So that's an important sort of little level there, even though that's the low. And then we've got that volume here. So we've got good volume here. We can see that. We can see what's going on. And then we would take that trade, you know, excuse me, 1 point above this bar here. The only weakness I can see in this switch so far is that the closing is below the opening. That's telling me that the sellers are still moving down. So you really want to check the market depth on this and have a look at the orders on the bid side and the buying side and the selling side, and have a look at how big those selling orders are and where they're sitting up here in these prices over here, because that's what you got to get through. Okay, and then have a look in the bid side, the buying side, and have a look at where the volume is sitting. because that will be your support. So for the time being, we'll put the support under here, under this volume, and the stop would go at an odd number at 13 there. If you wanted to put a tighter stop, then it'll have to go at 17, because the orders will be sitting at 18, and this is the closing, which has got significance. So 17 would be the go if that takes on through up there. So using the closing as a bit of a resting spot there, but it's also a level as well. The levels run in 1, 2, 3, 5, and 8, and that's 18 there, so it's an 8. Mind you, the 20 is the next level there, so you've got 10, 20, and 30, so they're just fractals. Just understanding and narrowing down the support and the resistance. Yep, so the next one is AMC. Okay, this one's at first glance is in better shape, simply because we've got, first of all, we've got nice volume here, but the closing is below, is higher than the opening. Only a small thing, but triggers all the same, because these, once you got the opening there, then this closing is like a little sort of indicator, really, isn't it? So being above the opening there has got significance. So it's kind of a very simple, basic, nice little trigger indicator by itself. So anyway, 680, there'll be orders sitting there. So you'd want to be at 681, but also this is closing here. The code's up here, the low and the high here. So that's at 681 there. So 682, you'd be triggered at that point there. And yeah, take it from there. You keep the stop under there for the short term, but you could probably bring it up under here at 72 is very important. So 65, 72, and 80, these are all sub-level groups here as well. So anyway, just see where the volume comes in. That's where you need to sort of read the market a little bit. ANZ. Okay, so once again, the little switch sort of set up there, reasonable volume. Doji there just means that it's, you know, it's the market depth is balanced, so to speak, and we'll just take that high there and then pop the stop under there and see how we go. See, that was a switch set up there as well, and I may have put it out, but it never got triggered because we never got this bar here coming back up through there. So that's the beauty of it. And just using the daily robo on here, you can see that it's a money earner, isn't it? You know, out, in, down, down, down. Easy money. Okay. Say that, and then you go and do it, it doesn't work. But the trouble with the thing with the robo method is that you have to be a good loser, because you need to be able to take the losses. But that's the good thing about this situation, is that you can control the losses, and that's something that you have control over. So you might have, you know, 2, 3 losses in a row, and then you get the fourth one and you're sort of deflated at that point, you know. So, but you need to take the next one. That's why it's really important to get all your facts and figures sorted out before you start in how much you're risking per trade in your bigger financial plan. Okay, so this one here is interesting because it's moved up, but it's closed on, sorry, this is AGO. This is moved up, but closed on lower volume. So that's really going up on a bit of hot air, but that will be lifted up today because BHP in the US was up and copper was up. So even though this is iron ore, they'll all sort of move together. But one thing you need to be careful of here is you can see this bar here, how it's closed lower here. And then this one here has tried to go back up and retest supply as well and been sold off as well. So now it's having its third crack, but it doesn't have the volume to display that. So today's bar will be significant as a telltale sign for this. And once again, if Friday's closing is strong, then that's likely to follow through onto the Monday as well. But we've got the Dow Jones at 11,800, so we've got problems there as well. So once again, even if this was a fourth wave moving up through here, if that was the case, like we talked about on the, what's the name, on the XJO, we'd only be looking to that 340 mark there anyway, you know. So a little bit tricky, but still, many times I've been proven wrong, and you take the setup and it pans out. So at least you're on the right side of the market and your opinions are in the bin, which is quite good. BHP is not something that you normally sort of day trade because it's got the gaps there, but all in all, nice setup, good prices, good volume. BHP in the US was up, so we should move up there, but obviously it's going to gap to here. So yeah, I'm not too sure about that. It's a bit sort of tricky. So you could get caught out. It's not the sort of thing that you day trade BHP, but I'll put it there because it's a favourite and it's got a setup. EQN. Okay. Good, but trouble is with this particular one, it may be trouble, maybe not, but this is the situation here. So we're at $5 here. So first of all, we got the pattern is right. We got volume on this one here that's pegged it. This one's moved up. We haven't shown volume, but we haven't seen the sellers really push this down as well. So if that can gap above that there at highs at 502, so I'd take that at 503. And then I'd keep the stop down here somewhere under the 480 or the 490 and wait until the afternoon session to see if the buying orders have moved up from 480, 490 into the $5 price there, because the more orders you get in there, the better. But once you're on this side of the market, then you've got the problem of all this supply coming down on this side here. So the 510, the 520, and the 530, it's their job, subgroup 1 there, to hold the market to it's 1, 2, and 3 here. It's their job to hold the price to the $5, and it's likely to do that. So any profit you can take at the 520, for instance, or even the 510, sweet. FXJ. Well, this has already been triggered as a switch in the same day because that's the pattern there. As you can see, it's all this has happened in one bar. It's taken that one out and then moved up and gone there. So the entry's gone. The higher volume is good, but still we can still take that. Just look in the market depth for a really tight stop on this there. So it'd have to sort of be under the 120 there. So you might be able to pop it at 19 there. So not a bad sort of a little sort of risk area there. The NAB, OST, I'm just running short of time. I'll skip the NAB. I'll just go to OST. OST, not that good because we've got 250 sitting there, which is a medium level sitting there. It's a problem. And also we've got low volume here. And we also got high volume on this one here. So we know the sellers are there. That's been sold off. The supply has come in on that. That's where that high volume has come from. The sellers coming back into here. So we know that there's risk there, So not such a good one. SFR, probably have a bit of buoyancy to it. Not a lot, but once again, at the medium level again. So it's stuck under there. Not such a good idea. FMG should push up with the other guys. But not a lot of volume at this stage there, but this is nothing big stopping us there. 580 is there as a medium, as a minor trading level, and 8's a profit taking number. You got the 8 there. So in this particular case, I would have put the price above that. Yes, I put it at 581, so not on the 80 there, even though the high price is 79. I wouldn't do it at 80 because I'd want all those orders at 80 blown out of the water, taken out of the depth, and 81 would clear that for us. So that'd be all right at 81. And IPL, we've actually got this as a short at the moment, and it's not really a switch either, but it's increasing volume, pushing to the upside, so a break above these there would be quite good. That high is 21, so at 422, take that and keep a nice tight stop on it, see if you can get it sort of pretty close in there. But before you put a stop, if you're taking a stop from here and moving it up here somewhere, have a look in the market depth and have a look at those orders on the buying side and put the stop under the biggest order and at an odd number. Alrighty, cheers.